Good evening, everybody, and welcome to Mike Dub 27 Day Trader. And today we are looking at the outcome of Lucid's earning report. Now, we're going to take a deep dive into this and really see what happened. So, of course, before the earnings report, it was hanging around $2.35. Then, and that was yesterday, that was Tuesday. So Tuesday after the market. So of course it stayed at $2.35 until the market opened. And then at 9:30 it went to 231. Then it jumped up 242. It looked like it was going to be promising. Then what happened right after that? With a 3.65% jump, it went down to 37, 35, 33, 30, 27, and 23. And it stayed there. Went up to like $2.25. But this looks like this is going to be the new base for Lucid Group. So it got cheaper, it got more affordable. But as far as its highs and lows, you're talking about somewhere between 223 now and 229. And that's kind of rough right there. So let's go down. The market cap shrunk. The market cap was at 7 billion. Now it is at 6.88 billion. So they shrunk the market cap on them. So they are now worth less than they were 2 days ago. Price to earnings ratio 1.83. Volume still the same, 95.33 million. Total volume, or max volume 136.49 million. Open price was 232. Low today was 223. So it's not looking too good for him. But at the same time, if you still believe in them, it's more affordable, you know. Now let's go down here and see some of the specifics. All right, so now as we go down here, we can see there's analyst ratings at a 16% buy, 61% hold, and a 22% sell. And it did better than estimated. Instead of negative 0.23, it was at negative 20. We talked about that the other day, but it wasn't enough for the obviously, it wasn't enough for the shareholders. We can still look right here. Our customers' buy volume percentage decreased by 9% versus last trading day. This is not an investment advice. I don't think the hedge funds really made any moves recently. Nope. And insiders, uninformative buy, uninformative sell, uninformative buy, uninformative sell. And it's the same person. You notice that? Whoever SVP Finance and Accounting, this Gagan Denai Dehingra, bought 270,000. Well, let's go from the bottom up. All right. If you look right here, sell 179,890 shares. Sell 383,376 shares. Buy 974,637 shares. Sell 101,185 shares. Buy 270,730 shares. This is interesting, the fact that it's the same people. They're selling, then they're buying. They're selling, then they're buying. You think if they actually wanted the stock to do better, they just buy and hold it, right? So are they day trading this particular stock. Because if that's the case, then it makes sense, I guess. You can catch it at it's a solid stock still, so it's not gonna drop down to 1 cent on you, like one of those penny stocks or one of those pharmaceutical companies. So, being totally honest with you, you could get it at $2.23, sell it at 2.29, buy it when it hits 2.23 again, sell it at 2.29. I don't understand that philosophy, but it's whatever. You're talking about 5 or 6 cents. But I guess when you're talking about hundreds of thousands of shares, maybe let's see if that works. Let's pull up the calculator. Let's see if that works. All right. So let's say, how did they do? Let's just say 100,000 shares. All right. And let's say times it's going between, let's say 6 cents times 0.06. Oh, let's do 0.0. Let's try that again. 100,000 times. It won't let me do the decimal. That's all. We'll move the decimal ourselves. Times 6. All right. So we're gonna go ahead and move that decimal. So instead of 600,000, it would be, let's see, right here. It would be 60,000. Here's an easier way to go about it. Let's say you take $300,000. You divide it by 2.23. My decimal is not working on my calculator. There it is. All right, I see what I was doing wrong. All right, let's go back to the original way we were doing this. All right, let's say you got 100,000 shares multiplied by 0.06. That's a $6,000, which, for regular people, that's perfect. But when you're talking about this, these hedge funds, it really doesn't make sense on why they're doing that. But that's what they're doing. They're just buying and selling, buying and selling. You can see it in all these different areas. The buying and selling, almost kind of just chipping at the block. So I don't understand that, but that's what's going on. And that's probably what's kind of keeping it where it's at, because they're not allowing the stock to actually go any higher. But needless to say, that's just what it is. So let's take a look at what I've done with my watch list. I'm going ETFing. But before that, let's look at Casella. Now, if you just look at it from a day, you think, all right, this is pretty volatile. 118 through 120, make a quick $2 here. But this is where it tricks you. Look at it from 1 week, 116 to 120. Look at it from 1 month, 103 to 120. This thing's been going up constantly. 3 months, 106 to 120. So this right here, it's doing its thing, and it's not showing any signs of falling back yet. It was founded in 1975. It's Casella Waste Management. All right, that's Casella Waste Management. Market cap of 7.63 billion. But here, check this out. Price to earnings ratio 548.88. That's crazy. That is amazing. The volume isn't even that much, but it's just constantly rising. So this is one of those where I want to do some more research on it, but if within 1 month it went from 103 to 120, that's a $17 change in 1 month that nobody's talking about. In 1 week from 116 to 120. That's a $4 change right there in 1 week. And then, of course, now it's almost like how you can't feel the earth turn because we're so small, but we know it does. So if you go to the day, it just seems like it's just some random volatile stock. But in actuality, all of this is just a segment of one giant incline. So I got some decisions to make on that one. Other than that, I got a couple of ETFs here. Got a Berkshire dividend growth. It's not moving that much, but it's a dividend. It has a bunch of different segments in it. But what I liked about it was has a 30-day yield. It's inexpensive, and I like the way it's moving. It goes 1141, 1151, 1138, 1145. And one day it kind of goes up a little bit, about 6-7 cents or something like that. But I like that. See the direction it's been going, and it's going in an upward, kind of an upward angle as well if you look at it from the month. And then we can see at one point in time, I think it was at $12. No, close to it. Let's see, a year ago. No, it's been around the same for all this time. It did hit 12.24, but still, it's never really went down more than $1 since July of 2023. So here's another one that's good. I found some gold today, basically. And then of course you got Cambria Cannabis, which is a cheap one. It's an ETF. I don't think they have any dividends. Yeah, they do a 30-day dividend, 1.57. But you're talking about 47, from 476 to 480, 472 to 480. So I'm kind of liking what this is doing. Now, it's not really going in the, yeah, it is. Look at that. 1 month it was at 393. Now it's at 480. But at one point in time it was at $5. So something caused this dip back in April, but it started going back up. So and just some new things we can add to our portfolio. See what we're gonna do with that. Other than that, everything else is kind of doing what it's doing. And I fired a stock. Which stock did I fire? BTCM. Let me see. BTCM. Yeah, Bit Mining. Yeah, they got fired. They decided they want to stop moving. So I don't know what's going on with them, but not messing with them anymore. So they're off the list and they're replaced by these new incomers: BDVG, LITP, TOKE, and CWST. All right, so we're gonna be watching them and see what's going on with them. But other than that, just another good day of trading. And make sure you stay focused, stay positive. Don't forget to like, don't forget to follow. This is Mike Dub, 27 Day Trader, and I'm out. Deuces.